Morning, guys. It's Wednesday, May 21st, 5:26 a.m. Central Time. Grain markets mostly higher this morning. July corn futures up 1 at 455 and a half. July soybeans up 7 cents at 1060. July Chicago wheat up 2 1/4 at 548 and a quarter. July Kansas City wheat up 2.5 cents at 538 and 3/4. July spring wheat up 2 3/4 at $6 and a half. We've got an update on the ECAP payments or the direct farm payments. Let's start with that today.
So, as of Monday, the USDA distributed $7.6 billion in ECAP payments. In March, the agency announced the program would provide $10 billion in direct payments to help farmers mitigate the impacts of increased input costs and falling commodity prices. So far, corn aid has reached roughly $3.1 billion, soybeans approximately $2 billion, and wheat about $1 billion. Iowa leads all states in total payments, receiving 697.3 million, followed by Texas at 644.5. Over 500,000 applications have been submitted for the payments. Sign up for the program runs through August 15th.
If you guys are watching on YouTube, these slides that I have are from USDA's ECAP dashboard, is what they call it. And I will include a link to that in this morning's YouTube video description. You can go through and play around with this and see who has received what. The payments were initially signed into law in the CR last year, along with the ERP payments. And they basically what the law said was that they could distribute up to 85% of this 10 billion, and you're getting pretty close to that at 7.6 billion. So maybe in this go around, it gets up to like, an 8.5 billion. And then eventually there's going to be another lesser round of ECAP payments. I understand that there are some counties or some areas of the country in which the payments have been delayed or have not been dispersed. And if you're in one of those counties, you've got to contact your elected official. You've got to contact somebody, because think what you want about the payments. I mean, people either love the payments or love to hate the payments, but I think we can all agree that there should be at least an even playing field. So if somebody the next county over has already seen the money and you haven't, I feel like that situation needs to be remedied. But in any case, this was a lifeline for farmers. Markets have been tough. I understand that it's a contentious issue. Some people think they're great. Some people think that this government stuff is the worst thing out there right now. But in any case, this is the update, and we'll have the links for you. And I'm going to go right into our ad this morning, and this will be the only ad that we do today. We did a 5-minute Friday video with Paul Neefer on Friday. We discussed the ECAP stuff, which I kind of talked about, but ERP is actually the larger portion of the farm relief package, and that's like a $21 billion deal. And we don't know exactly the details, but Paul probably knows a little bit more than you do. He certainly knew more than I did. So if you're looking for some details on when those applications will be available and how this is all going to work out, you may want to check out that premium video. In yesterday's premium video, we did another round of transition planning with Chris Barron. We've got, I think, 3 or 4 videos in total with regard to transition planning. And what I recommended for our premium subscribers who saw these videos, I said, guys, forward this stuff to people that you farm with and sit down and watch them together, because I guarantee that even if you have a transition plan, you've got several holes in your transition plan that need to be addressed. And Chris discusses a lot of there are things that I never even thought of that Chris brought up that were super interesting. I did new crop corn carry thoughts and concerns last week. This is some pretty hardcore grain marketing stuff. So if you're the decision maker on your farm, if you make the marketing decisions, this is the kind of stuff that you need to watch. If you're here for entertainment purposes, no, this isn't going to do anything for you. But if you want to help to optimize your farm's marketing, this is something that I would check out. Guys, our premium subscription is $50 a month. You can sign up on our website at standardgrain.com. It's an information only service. We talk about the things that matter to you: cash grain marketing, policy, weather, crop insurance, all that stuff. That's what we discuss in our premium videos. Whenever we do cash grain marketing, I do a video explainer. I discuss exactly what my thoughts are. Nobody will try to sell you anything else. We just want to sell you information, basically. And remember, we're totally independent here. We don't have sponsors. We don't have a corporation behind us. So in order for YouTube to exist, in order for the podcast to exist, we need the premium subs to keep rolling in, because that's what kind of floats the boat for us. So premium subs, we love you to death. If you are not a premium sub, check that deal out this morning.
Chicago wheat futures surged on Tuesday, reaching their highest level since late April. The July 25 contract rose 17 cents to settle at 546 per bushel. The rally was supported by a weaker US dollar and Monday's USDA crop progress report, which showed an unexpected decline in crop conditions. As of Sunday, 52% of the US winter wheat crop was rated in good to excellent condition, down from 54% the previous week. Additional support came from weather related concerns in China, where forecasts suggest hot and dry conditions could impact wheat crops. Reports indicate temperatures could climb as high as 108.3 degrees Fahrenheit, accompanied by strong winds, raising fears of potential crop damage.
Yeah, Mackenzie mentioned a couple of the issues here. So the crop rating's down. China's got some issues. We're going to talk about some potential Russian issues here in a second. And then from a technical standpoint, you've got a big fund short in the market. Large speculators are heavily short, the SRW wheat market in particular. So when they see these friendly headlines, you're going to see some short covering. This July SRW wheat chart looks a little bit better this morning. We're trading above some trend resistance. You'd like to see this thing close higher this morning. Same thing goes for the July HRW wheat contract, also trading above some trend resistance this morning. Ideally, we run some stops here and force some short covering, get this thing to go a little bit higher. Wheat prices have gone a long time without any sort of substantial rally. The spring wheat market does not look as good. You've still got a little ways to go till we get up to some trend resistance. I think some of these rains in spring wheat country as of late, Montana, North Dakota, places like that, may have been a little excessive. And I don't know if that's necessarily good for the crop. If you guys are in spring wheat country and you've seen excessive rain, drop us a comment and let us know what you think.
Poor weather conditions are expected to impact Russian crops. Rostov, the country's largest grain producing region, is forecast to receive high temperatures and below average rainfall in the coming months. Earlier this week, a state of emergency was declared in the region due to spring frosts, making it the third major grain producing area to take such action this season. The combination of frost and upcoming hot, dry weather is likely to affect both winter and spring crops. However, Russia's ag minister stated last week that damage from the May frosts is not expected to be significant, estimating losses at only about 10% of last year's levels.
Yeah, this is not necessarily like a fresh breaking story. This talk has been around for at least a couple of days now. So I think that this is just one of the contributors when it comes to this little pop that we've had in the wheat market, and hopefully it continues. Russia, of course, is discussed a lot with wheat because they're the top exporter, and they're projected to be the top exporter again in the next marketing year. USDA projects that they'll account for 21.3% of all global exports, and they would be number one. The EU would be number two. Canada would be number three.
Rains were substantial over the U.S. Corn Belt during the last 72 hours. Totals in excess of an inch and a half were seen in large areas of North Dakota, South Dakota, Nebraska, Minnesota, Iowa, Missouri, Illinois, Indiana, Kentucky, and Tennessee. Some rain lingers in northern and eastern parts of the region early this morning. Rainfall over the next 5 days will be heaviest in Missouri, far southern Illinois, and parts of South Dakota. The 5 to 10 day period introduces more rain for the central and eastern Corn Belt. The 11 to 16 day GFS brings additional rain to the western Corn Belt.
I think you're almost getting to a point here where the weather is going to start to matter a little bit in the way that it typically matters during the summer months. Like if you were looking at this 16-day forecast here and it was completely dry, especially for the western Corn Belt, I think the market would look at that right now and say, yeah, that's a little bit friendly. But, I know that there's been a lot of drought talk. There's been a lot of drought talk. There's drought talk every year. I've mentioned this before. There's drought talk every year. But the chatter has been a little bit louder this year from the weather forecasters, especially with regard to the Western Corn Belt. Now, this GFS forecast out through June 6th, you see a lot of this stuff on the screen is in the extended period, like the 11 to 16 day. That's not necessarily reliable. But if it is reliable and if those rains hit, it's going to be harder and harder as time goes on to make that Western Corn Belt drought argument. A couple different maps from our friends at Crop Profit here, and we're getting to the point where you can get down into the nitty gritty and start to talk about Euro versus GFS. So here's Euro model data from our friends at Crop Profit. The Euro model says that over the next 14 days, the Corn Belt on average will see only 71% of its normal rainfall. And you're going to see drier than normal conditions and much drier than normal across a lot of Illinois, almost all of Iowa, almost all of Minnesota, a lot of Nebraska into the Dakotas. If you look at the GFS version of this, however, it's a little bit wetter. You're talking 94% of normal rainfall. So you're getting to a point now where you can start to dissect the weather models in a little bit greater capacity than maybe you would any other time of year. And this is the only time of year that I really do that. I mean, looking at Euro versus GFS and try to get a better, more in-depth feel, because honestly, it doesn't matter for the U.S. the rest of the year, but you've got a 2-month, 3-month window coming up here where weather is going to be the number one driver of prices, bar none. So we've got to pay attention.
China's soybean imports from Brazil plunged in April. China imported 4.6 million metric tons of soybeans from Brazil last month, down 22% compared to the prior year. The decline was driven by a delayed harvest, logistical challenges, and customs delays. Imports from the U.S. also fell sharply, totaling 1.4 million metric tons, a drop of nearly 44% compared to April 2024. The decrease in shipments was partly attributed to tariff uncertainty, which has caused Chinese buyers to rely more heavily on Brazilian supplies. Additionally, China typically sources more soybeans from Brazil during this time of year and increases purchases from the U.S. in the months ahead. Total Chinese soybean imports in April totaled 6.1 million metric tons, marking the lowest monthly volume since 2015.
I think they're going to catch up eventually. So they're talking some slight delays in harvest, some logistics issues, customs delays. Those are all they're not man-made things, but they're things that will get passed, I think, eventually. The demand for soybeans in China, or Chinese demand for soybeans, is in question because the Chinese government is saying one thing and USDA is saying another thing with regard to new crop. USDA's got a pretty lofty China import projection for new crop at 112 million metric tons. That would tie the previous record from 2 years ago. The Chinese government is sub 96. So you've got a difference of 595 million bushels between USDA and China. That's like double the U.S. carryout. That's a big difference in the projection. And where do Chinese imports ultimately fall? I don't have a clue. I know people have discussed the economy in China. Maybe that matters. Maybe the Chinese number's closer to reality. We don't know. It's a marketing year that hasn't started yet, but some food for thought.
Chinese gold imports spiked in April to 127.5 metric tons, a 73% increase from March, and the highest level in 11 months. This surge occurred despite prices hitting multiple record highs during the month, briefly reaching $3,500 per ounce. The increase in imports followed the People's Bank of China's decision to ease import restrictions by issuing new quotas to select commercial banks. The move was in response to growing investor demand fueled by geopolitical uncertainty and trade tensions. While gold prices have softened this month amid hopes of easing trade tensions, continued central bank purchases and a shift away from the US dollar are expected to further support prices.
China continues to buy despite high prices. I pulled some data regarding gold reserves by country, and this is as of March 2025. So according to data from the World Gold Council and also from IMF, the U.S. has the most gold reserves at 8.1. I guess it's at metric tons. I don't even know you don't even ask me what the units are, but the United States holds the most gold. How accurate are these numbers? I don't know. Probably about as accurate as a USDA report. And you can take that as a joke or not, depending on who you are. We haven't done the Fort Knox audit, so I don't know. Again, is this number real? I don't have a clue. But
Who knows?
the U.S., I think we still have them. I think the United States still has the most gold. That's what the data would indicate. What did cattle do yesterday?
Cattle futures were mostly higher. Live cattle were 20 cents to 72 cents higher, with the exception of the August contract losing 7 cents. Feeders saw gains ranging from 2 cents to 72 cents, except for the September contract, which lost 12 cents. Boxed beef continued its climb higher. Choice was up $3.94 at $358.75, and Select was up 85 cents at $344.96.
The Dow Jones is down 400 points this morning. The S&P is down 46, kind of in correction mode. It's been awfully strong as of late, though. Treasuries are off. U.S. dollar is off and off quite sharply. Crude oil is up 58 cents in the July WTI at 62.61. That lower dollar, looking at grains this morning, could have something to do with the strength. Have a great day, guys. We'll be back on Thursday.